again, we're really at the crossroads now. Either we'll have a red-hot bull market, which brings us into this stock-to-flow range, or we'll see a distribution phase and then a bear market phase. And then, of course, the stock-to-flow will be invalidated, and other models are more right. But again, I expect more all-time highs in 2025. I expect higher RSIs above 80, red, multiple months of RSI 80, and I expect the moving average to curve upwards and also the realized price to curve upwards.
The past few days have been a whirlwind for Bitcoin and the broader cryptocurrency market. On Sunday, former U.S. President Donald Trump announced on Truth Social that his administration is working on establishing a crypto strategic reserve, which would include Bitcoin, Ethereum, XRP, Solana, Cardano, and other major cryptocurrencies. This announcement triggered a surge across the market, with Cardano skyrocketing by as much as 60% within hours. However, the rally was short-lived. By Monday, prices started to tumble again following Trump's latest tariff proposal. His administration's plan to impose a 25% tariff on imported agricultural goods led to sharp market volatility, pushing Bitcoin back below $84,000 per coin. As of press time, the global crypto market has lost nearly 9% in value, with over $1 billion in liquidations. The 24-hour trading volume has dropped to $177.23 billion, reflecting a 13.43% decline, according to CoinMarketCap. Popular Bitcoin analyst PlanB believes the market is now at a crossroads, balancing between a V-shaped recovery that could extend the bull run and the early signs of a bear market. While he leans toward a bullish outlook, he acknowledges that the growing influence of traditional financial institutions in the crypto space could alter market dynamics.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Bitcoin dropped to $84,000. That's minus 18% from the 102,000 in January. So the reason for this drop was the Bybit Ethereum hack, $1.4 billion in Ethereums stolen, and that spooked the market. But of course, it had little or nothing to do with Bitcoin. Anyway, the minus 18% dip is a big dip, but it's not unusual for Bitcoin. Bitcoin is very volatile. Even in bull markets, we can have multiple dips that are 20 or even 30% minus. However, it was still an unexpected dip. I expected more all-time highs after January all-time high, and I expected February to be an all-time high as well, above 102,000. So we're really at the crossroads right now. Either we'll have a red-hot bull market, a continuation of the bull market, or we enter the distribution phase into a bear phase. So what will it be? I don't know. That's a big question. Was this the top? And is this dip the start of the bear market? Or will we see a V-shaped recovery and more bull market action? If you look at relative strength index, the RSI, it was also down to 63. 63 is green, so that's this green dot. Down 13 index points from 76, orange, last month. So the good news, of course, is that 63 is still above 50, and everything above 50 is uptrend. So we're still in an uptrend. But the bad news, of course, is I expected more or finally RSIs of 80% plus and red dots. That was the expectation. We didn't see that minus 18% return. So a RSI of 63. What seems to be the case, I'm not sure, but it looks like it, that the normal range of the RSI for normal assets like stocks or the dollar euro rate, The normal range would be between 30 and 70. So everything above 70 is overbought and will revert back. Everything below 30 is oversold and has a possibility of going back. So with all the traditional finance guys moving into Bitcoin, ETFs, etc., I think they are a little bit spooked by RSI of 70 and 76, for example, that we saw in January. So it looks like they sell every time that the RSI is above 70, 75.
In his latest video, PlanB highlights that institutional investors, who are still relatively new to Bitcoin and the crypto market, tend to sell quickly when prices surge. Unlike traditional assets, which experience far less volatility, Bitcoin's rapid movements can make these players uneasy. His March update also examined key long-term indicators, including Bitcoin's 200-week moving average and the 2-year realized price. The 200-week moving average rose slightly to $45,000 in February from $44,000 in January, though its slower-than-expected growth suggests weaker momentum in the current bull market. Meanwhile, the 2-year realized price remains steady at $74,000, a metric that usually rises sharply during bull markets as new capital flows in. While its stagnation is concerning, Bitcoin's current price of $84,000 still sits well above this support level. PlanB also discussed his widely followed stock-to-flow model, which predicts Bitcoin's price based on its scarcity. The model continues to project an average price of $500,000 for the 2024-2028 halving cycle, with a potential range spanning from $250,000 to $1 million. According to PlanB, Bitcoin is at a critical juncture. If a strong bull market pushes prices into the S2F range, it will validate the model. However, if Bitcoin enters a distribution phase, where price stagnates instead of surging, the risk of a bear market increases, potentially undermining the model's reliability. Despite these uncertainties, PlanB remains optimistic about 2025, expecting new all-time highs within the year. He points to several bullish indicators, such as Bitcoin's relative strength index staying above 80 for extended periods and an upward trajectory in both the moving average and realized price. Meanwhile, Real Vision founder and CEO Raoul Pal holds an even more bullish outlook. In a recent market update on his YouTube channel, he expressed confidence that Bitcoin's recovery could begin much sooner than most anticipate.
Hey everyone, look, I know it's a bit chaotic in markets, and many of you are first cycle in crypto, and I know that you need a bit of guidance and a bit of reassurance that everything's going to be okay. Listen, all of us have our lives and dreams in this whole kind of banana zone thesis. It all matters. We're all trying to unf our future. Let's go through how not to f this up. I've got the Don't F This Up t-shirt on. You can now understand again what I keep saying. If you're using leverage, you are going to get blown out and you're going to lose control of your tokens. That is rule number one. Do not lose control of your tokens. Do not use leverage. Don't FOMO and don't get fearful at the wrong points in the cycle. We have a framework. It's there to help you. We are still early stage within the final year of the crypto bull market when a lot of the big gains come. It's time not to lose your shit. Have patience. See the bigger picture. Also, how you construct your portfolio. I'm saying, well, 35% pullbacks are par for the course. And you're saying to me, oh my God, my fucking portfolio is down 80%. It's because you're not using the don't f this up thesis, which is you can only have a small part of your portfolio in the smaller tokens. The healing phase, who knows? Could be 2 weeks, could be a month. But the back end of March, we should start to see prices accelerate. And then April, May, June, we should see some really significant price action as the second phase of the banana zone kicks in. These phases of the banana zone, I get so fed up with people online going, where's my banana? Your banana fell over. Your banana's not ripe. Your banana, blah, blah. The banana zone is a period of time that lasts a year. It is not an instant gratification. You guys need patience more than anything else and need to understand markets. So we had the start of the banana zone. We are now in correction phase one. That happens each and every time. Look at 2017. It's almost identical. Then, as we go into March, April, May, we start accelerating up again into the next phase of the banana zone. And then we'll have another correction. And you'll be going, oh my God, it's all over. It's all over. Am I going to die? Have we screwed this up? Where's your banana? Again, you'll have forgotten everything that went before it, and you'll be gripped with fear all over again. Then we have the final top into the end of the cycle. My view is that the business cycle is taking a long time below 50. It's starting to expand now. That has probably extended the cycle into 2026. Not a guarantee, not yet a prediction, but is what is in my head because of the structure of the business cycle. So we can probably keep going longer, and that will still give us much higher prices to come. So the game is all to play for. It is a game of don't f this up. It is a game of understanding the rules, understanding to have patience, and stepping back, zooming out, touching grass, touching sand, and let it play out.
Raoul Pal believes the current crypto bull market will extend until 2026, rather than peaking in 2025 like previous cycles. He attributes this to a combination of institutional adoption, structural demand from Bitcoin ETFs, macroeconomic liquidity trends, and the evolving role of Ethereum and other crypto assets. Unlike past cycles, which were primarily retail-driven, this cycle is witnessing significant institutional participation, leading to a more gradual capital allocation. The introduction of Bitcoin ETFs has also created continuous buying pressure that was absent in previous bull runs, making a sharp peak and crash in 2025 less likely. Pal also highlights the role of macroeconomic liquidity cycles, particularly the Federal Reserve's policies. If the Fed eases monetary conditions through rate cuts or liquidity injections in 2024 or 2025, it could further extend the rally beyond previous cycles. Additionally, he believes crypto adoption is broader than ever, with Ethereum's expanding ecosystem, real-world asset tokenization, and decentralized finance playing a much larger role this time around. These factors contribute to what he describes as a potential supercycle, where Bitcoin's traditional 4-year halving-driven pattern becomes less dominant. Instead of the usual rapid rise followed by a steep decline, Pal envisions a more prolonged and sustained rally, with the market reaching its peak sometime in 2026 rather than post-halving in 2025. What do you think of Raoul Pal's and PlanB's analyses? Do you believe crypto prices have already peaked and a bear market is beginning, or is a V-shaped recovery on the horizon for 2025 and beyond? Share your thoughts in the comments below.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.